stock credit. But now I must go and work it out. They did not give me the cost of sales, they gave me a markup. They told me the markup is 50%. So to do that, I use that grade 9 markup formula, which is I want to work out the cost price, that equals the selling price, multiply that by 100 divided by 100 plus the markup. So the selling price that was given was 6,000. So cost price would equal 6,000 times 100 divided by 100 plus the markup. What was the markup? The markup is 50%. So 100 plus 50, 150. So 6,000 times 100 divided by 150 equals 4,000. So my cost of sales is 4,000. Good, I said cost of sales is an expense. I've got more expenses. More expenses means less profit. So the owner will have less money. And I said trading stock is an asset, and there will be less assets and a minus on the assets. Whatever happens in the asset column, that's the one side, should equal those two. If I look at the first one, a minus and a plus is nothing. Plus equals a plus, minus equals a minus. So I still, my equation still balances. Number 3, the owner took merchandise for personal use. Okay, anything the owner takes, whether it's money or stock or whatever, goes to drawings. So wherever I see the owner took something, one account always drawings. What is it what he took? He took merchandise. Merchandise, trading stock. So the owner took some trading stock. So the other account, trading stock. Drawings is an owner's equity account. If he took some more money out, so will his equity be, will he have more or less? He will have less. If he took some out, he'll have less left. What side do we make our owner's equity less? The same as with the liability on the debit side. Trading stock is an asset. He took some of the stock, so we'll have less stock left. What side do we make an asset less? On the credit side. So we're going to debit drawings and credit trading stock. So we're going to debit drawings and credit trading stock. The amount for personal use, 800 Rand. 800 Rand. I said drawings is owner's equity, and owner's equity gets less, so I'll put a minus on the owner's equity. I said trading stock is an asset, it gets less, so I'll put a minus on the assets. Okay, these numbers are a bit far between. Okay, number 4, fixed deposit of 20,000 with Mhlanga Bank has matured. The bank deposited into the business bank account 22,500. So 20,000, but we got 22,500 back, and they say that is including interest. So the bit that we got more, which is 2,500, was interest. So let's look at how we're going to calculate that. If they put money into our bank, it means one account must be bank. Again, with this transaction, there will be two parts. We're going to receive money. First bit that we receive is the fixed deposit that they give us back. So it is the fixed deposit. We must just remember, we must always put in the name of the bank when we use fixed deposit. Okay, a bank is an asset. We received some money, so we'll have more money in the bank. Asset increases on the debit side. Fixed deposit was money that we also had in the bank for a longer period. It's also an asset. They gave it back, so there's no more fixed deposit left, so it got less. It's a credit. That's for the first part. The second part, for the interest, we also receive it, so also going into the bank, which is an asset. If we receive, we'll have more, which means, again, debit. What is it that we receive? Let me just get back there. We're receiving the interest, so it's interest on the fixed deposit. That is money that we receive immediately, which means it's an income. And we'll have more income because we received more. Income gets more on the credit side. So there's two transactions for this one. First one is between bank and fixed deposit. So let's put it in. There it is. So the first one is between bank. I said bank debit, fixed deposit credit. So bank debit, fixed deposit, and remember we must put in the bank name. Let's see what the bank name was. Umhlanga Bank. Fixed deposit, Umhlanga Bank. And the amount of the fixed deposit itself was 20,000. Only the 20,000. The other bit that they gave back wasn't the fixed deposit, that was interest. So it's 20,000. And they were both assets. So it would be a plus and a minus under assets. Because bank is an asset and deposit is an asset. There's no owner's equity or liability, so I can't put anything in there. So both can be the same thing. Second bit, bank debit, interest on fixed deposit credit. Bank in the debit column, interest on fixed deposit in the credit column. With this one, with the interest, I don't put a bank name in. All the interest goes into the same one. So the interest would be the difference between what they pay, 22,500, and the fixed deposit, 20,000. So it's 2,500. Bank is an asset, and it got more. So the assets got more. And the interest was an income, more profit, more owner's equity. So it will also be a plus under owner's equity. Good, and that was the accounting equation.